For 60 years, Warren Buffett's most famous piece of advice was this: when everyone else is selling, you buy. He called it being greedy when others are fearful. So when the most famous investor in history spent the last 3 years doing the opposite, quietly selling half his portfolio and sitting on an enormous pile of cash, the world noticed. And the question everyone is asking is why? The selling started gradually back in 2022. Berkshire Hathaway, Buffett's company, began quietly reducing its positions. Then it accelerated. Then it became something Wall Street had never really seen before. Between early 2023 and early 2026, Berkshire sold nearly $239 billion worth of stocks. Not in a panic, not because of a crisis. Slowly, deliberately, quarter after quarter. One of the most symbolic moves was Bank of America, for years Berkshire's second largest holding. Buffett cut that position nearly in half in the space of 18 months. Apple, which at one point represented the heart of the portfolio, was also dramatically reduced. By the time Buffett handed over the reins, Berkshire had been a net seller of stocks for 14 consecutive quarters, 3.5 years without stopping. And all of that money went into one place: cash. And here's the part of the story that most people are still catching up with. On December 31st, 2025, after 6 decades leading Berkshire Hathaway, Warren Buffett, at 95 years old, officially stepped down as CEO. The man who turned a struggling textile mill into a trillion-dollar empire handed the keys to his longtime deputy, Greg Abel. Buffett isn't fully disappearing. He remains chairman of the board and says he will keep coming into the office. But he has stated clearly that he will be going quiet, leaving all investment decisions to Abel. So the selling was not just a market call, it was also, in part, a handover. Buffett was cleaning the slate, reducing complexity, locking in gains, and leaving his successor with a war chest rather than a portfolio of positions he had personally chosen over decades. But there is a deeper message here, one that goes beyond Buffett's retirement. Buffett and his team have been hoarding cash because they view the broader stock market as overvalued. There is a metric Buffett himself invented and simply called the Buffett indicator that compares the total value of all stocks in America to the size of the actual economy. That indicator recently hit a record high of 235%, meaning stocks are worth more than double the entire American economy. By historical measures, this is the second most expensive stock market in the last 155 years, beaten only by the dot-com bubble of the year 2000. Buffett has never been someone who shouts warnings from the rooftops. He speaks through action. And his action, for 3 straight years, has been the same: sell, collect cash, and wait. His successor, Greg Abel, is continuing exactly the same pattern. In his very first quarter as CEO, he exited 16 positions entirely. The philosophy has not changed. Only the name at the top has. Warren Buffett spent 60 years teaching the world one lesson above all others: price matters. It does not matter how great a company is. If you pay too much for it, the investment will disappoint you. Right now, the man who built the greatest investment track record in history looked at the market, looked at the prices, and chose cash over stocks for 3.5 years in a row. His successor is doing the same thing. Maybe they are wrong. Markets have surprised everyone before. But when the most patient investor who has ever lived decides to wait, that is probably worth at least a moment of reflection. Hit like if this made you think. And subscribe for the next deep dive.